Core Mortgage Show podcast that we do every Wednesday. I'm Harvey Freed. The show is brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. John Kolb joins me. John, good morning to you, sir.
Good morning, Harvey. It's a nice, tight little knit group here today. Just you and I and Roberto in the booth singing the songs in his head. It's a beautiful day out here in Southeast Michigan. Lucky that we still got this weather going on. Get out there, start looking at some homes. We had a great guest. Harvey, you were in Vegas last weekend, enjoying some sun and desert. But we had a great guest on the radio show this past weekend, Renee Lacia-Acho from Keller Williams Domain and her RLA real estate group. She had a lot of insight. We talked a lot about how the different seasons bring out different ways to stage a home. She gave a lot of tips about, hey, in the winter and also the spring, when the weather is not as nice, a little bit more dreary, she may start taking photos now, so people can see what the homes look like with beautiful sunshine and vibrant colors and what they might look like with different seasons and different holidays. So it was a lot of great information that she brought to us. She's always a true professional, and we were happy to have her.
Yeah, keeping real estate really exciting and just keeping it conversational. There's a lot of people got in the industry, and I don't know if they think real estate's become something different. It's buyers and sellers. It's spending a lot of money as families are forced to overpay for housing now with the lack of inventory. Good thing is the homes have been appreciating it probably here in Southeast Michigan between 8 to 14%, 8 to 15%, probably over the. John, let's talk about the elephant in the room, as always, the mortgage rates. Boy, John, last 2 weeks were brutal. We thought we were sinking in and settling in at 7%. Some clients out there with lower deposits, lower down payments, worse credit scores, might have been 7.25, 7.5. John, those burped up. They went straight up. Now about 7.75, closer to 8% for some families. It's not leaving anytime soon. The Fed spoke about longer. Higher for longer. So I don't think these interest rates, we hope they settle down finally, but I don't see any reduction in interest rates coming anytime soon.
No, the Fed's stuck on their 2% inflation rate, and which is probably unachievable. So until we figure out that we might have to adjust our inflation standards, we're going to be looking at these higher interest rates for a little bit of time. And unfortunately, it is not the way that a lot of industry members think that we should be going. We've really put a halt on anybody being able to take any refinance out for any cash out, debts consolidation, put a halt on people trying to sell because they don't want to sell with their 3% interest rate and move into a new home at a 7.5% interest rate. And so there's just not a lot of inventory out there. And we got the biggest group of individuals trying to buy homes, the millennials out there, anywhere from what Harry always says, somewhere like 27 to 41 or something like that. That age group, they're out there trying to buy homes. They're first-time home buyers, nothing to sell, and there's just no inventory out there. So we really got to push on the Fed to really make some different decisions to try to spur this housing economy back into motion.
Yeah, no doubt. The job openings labor turnover survey, they got a new thing out. It's been around for a while called JOLTS. It's not a report that the Fed has been paying attention to, but recently they have been. I read an article this morning. I wrote down some notes. Opening data came in much higher than expected. Job openings have been declining across the United States since March. So that's a really good thing for interest rates. However, the Fed hasn't picked up on it. And Becky's trying to get in the show right now. She's having a little technical difficulty. But the decline of the job openings would be good news for mortgage rates, yet it hasn't trickled down to the Fed. And we've seen rates really jump up in the last 2 weeks. Let's get off the rate thing, John, because at the end of the day, I had a good late call last night. Clients looking to make an offer on a house, and they weren't in. They didn't want to dive into this. So they have a current house that they love. They love the subdivision. So I asked Julie last night, who's a buyer. I said, are you in this 100%? Because today's market's not for I'll make an offer. They literally were going to make an offer contingent upon the sale of their house. And John, you and I both know with the lack of inventory out there, there's already 3 cash offers on the home and probably a lot more after they do an open house this weekend. So really just getting the buyers to focus in on, is now your time. Again, if you're a first time home buyer, for sure now's your time. But if you're selling your house, you're going to net a lot of money. Are you willing to walk away from your current equity position and buy a new house because that fits your needs, knowing, John, that you're going to be paying probably double on the interest rate?
Well, it's all about needs and wants, right? You know, if you don't need to and you don't want to, then don't. But if you need to move, you know, I've got a couple that are moving from Rochester up into the Frankenmuth area to be closer to family because the family is getting older and they need to be a little bit closer to take care of them. So
Right.
that's a need, and they need to do it. And funny that you say, you know, should we go in with a contingent offer? They were thinking, should we go in with a contingent offer? Said no, absolutely not. What we need to do is make sure that you qualify for both homes, because odds are, as soon as you put your house on the market, it's going to fly off the market, as it had their last two homes. They just do great improvements and they keep the house very, very nice, and they always buy in very nice areas. So we got them pre-approved based upon them not selling their house. So they're all good to be able to put, you know, 5, 10, 15, 20% down, whatever it is, without selling the sale of their home. Got an offer accepted, and lo and behold, 4 days later, they put their house on the market. They got an all cash offer, close in 10 days, and everything's gravy. So now they've got, you know, 50% to put down on this new home, and they don't have to worry about it. Yes, they're going from a 3.375 interest rate to I think I locked them in at 7.25 or something like that. But you know, their need is that they need to be a little bit closer, and we can always refinance. Harvey, you and I have been through this in the year 2000 when rates were at 8%, and you know, they started to come down that next couple of years, and we refinance people for sometimes for free, zero cost refinancing. It's an option. People ask us about it, and we can make sure that you get taken care of so that you're getting the best of both worlds. Get into the house now, get the lower interest rate down the road.
Lots of ways to purchase homes in today's marketplace. We still have all these available products out there. And usually when the market gets crazy out there, I thought sometimes they would pull some of these products, but the products that are available are a couple of zero down programs. Of course, our veterans, any family that served in the military, VA loans are still very easy to get approved with. Higher ratios are still allowed, a little bit lenient credit. We see the credit down to 620 sometimes on VA. USDA loans, same type of thing. 620 to 640, FHA 3.5. There's so many opportunities out there, John. And then on the more expensive side, the jumbo rates are extremely competitive. Really, they're not too far off of the conforming rates. And of course, the conforming limit, $726,200. The FHA limit, $420,030. I mean, there's just so many opportunities out there to get a mortgage. One of the things that I realize is the families that are calling me, the young adults, they're clicking buttons. Their lack of education is increasing. It's going the wrong way. They're dumbing themselves down. And it's a sad thing to watch as some of the national lenders out there are putting that narrative out there. It's almost like they're introducing people to click buttons instead of educating and giving that confidence to a first-time home buyer who's going to be paying a higher interest rate than a lot of families to have now, that are going to be overpaying on homes. I feel like there's this lack of connection between really what families need to know about mortgages and how some of the advertising is going along. So just to talk about a little bit about that is, what can we do to tell people, look, you need to work with a professional team. Stop clicking buttons. How do we get them really to understand that, look, the first step is getting a professional team behind you and learning what to do?
I mean, all we can do is keep preaching, right? I mean, unfortunately, in this day and age, everybody wants to do everything online, which I understand. You want to be able to bank online. You want to get your bank statements online, pay bills online, you know, shop online. But unfortunately, when it comes to shopping for a mortgage, there's a little bit more to it. We offer everything online. I very rarely meet with clients face to face anymore, which is unfortunate because I really like to meet with clients face to face. But with traffic and construction and just, you know, all of the nuances in life, kids sports, everything, people just don't have the time. And but that doesn't mean that you can't hop on a Zoom, you can't hop on a phone call with somebody and so we can explain it, because I can't explain the ins and outs of the rates and what you should pay for and what you shouldn't pay for just by through an app. I can't. And because there's much more to it. You have to understand more. I always go forward with a transaction like, what would I do for John? What would I do for myself? What would I do for my parents, my brother, my sister? So those are the type of things that you got to look at. You got to hear the intent in someone's voice on are they willing to get into the nitty gritty with you, or are they just trying to rush you off the phone to get you going? We build our business on relationships and making sure that we're taking care of people, and that's what we're going to continue to do.
Yeah, let's go back to that quality of the house. I like a couple of really great helpful tips. I got to work on getting a guest for this Saturday show. Got a couple agents that are thinking about coming on and giving us their expertise on real estate and what's going on locally. But I love that Renee dropped a few helpful tips for sellers. Yeah, it's still gorgeous outside. The grass is green. The flowers are still blooming. Get yourself some mums and those holiday, this fall you get the mums going in the flowers that sort of match the seasons. But I love that idea that you get your house all dressed up and you present it the best possible way. As you mentioned, John, a lot of these homes are going to be sold January and February. You can't see any landscape. We might be buried in 20 inches of snow this winter. So what you can do is, as a seller, is start taking those glamour shots now of your home, get some professional shots done. If you're thinking about maybe selling the house over the wintertime, over the next 6 months, because even when the weather changes in March, there's no leaves on the tree. All right. Any other subjects you want to talk about, John? Otherwise, we're going to wrap you up here. We want people to definitely tune into the radio show on Saturday, 97.1 The Ticket, 9 a.m. We're going to be giving you lots of information about mortgages and real estate. And more importantly, everything that's going on here in Southeast Michigan. What else you got, John?
I mean, the last thing is, I think, if you've got debt out there that you can get rid of, I say utilize the house right now to your best ability, whether it's through a home equity line of credit or just a standard refinance, cash out refinance to pay some debt off. Don't worry about the interest rate. Don't worry that you're going from 3 to 7. You got to really look at the bottom line numbers. That's what's coming out of your pocket each and every month. And we can analyze and do all that for you. Make good decisions. There's too many people. I mean, our credit card debt load is the highest that it's ever been. Right. And too many people are living off of their credit cards and struggling to get them paid off. They're throwing money away each and every month with the interest on credit cards. We can fix that for you. We can figure out how to get you into a good situation, saving money on a monthly basis. And we can also figure out how to get your house paid off sooner than 30 years, 15 years by applying a little bit extra. So give us a call. Let us work those numbers for you. Consultations are free. And if you don't take advantage of it, you're just missing the last free thing on the market, in my opinion.
Yeah, amen. I'll wrap it up with a couple things, John. Is a lot of families, like you said, the credit card debt, and then you get the marriage situation going on. A lot of families, 50% of the marriages don't work. Divorce, there's reasons why people have to sell their house, consolidate debt. A lot of stress out there as the cost of almost everything has gone through the roof. If you were thinking about putting a garage door on 3 years ago, you can figure it's more than double the cost. We had some garage people out, some door people out, giving us some ideas of what things cost now. And there's no doubt the last 2 years, things have almost doubled and tripled. So I'm glad you mentioned that. Debt consolidation, do the math. And more importantly, we talked about this situation because if you're getting divorced, you're in that situation, you can't click buttons on mortgage companies. Those deals are all blowing up. We're getting the phone calls here. You need a professional team to talk and discuss with you and your spouse who might qualify. If you have children, you want to keep the house, who might qualify for that next mortgage? What's the real plan? We help families be amicable and help them save money with their attorneys by giving them the knowledge they need so they can sit down with their soon-to-be ex-spouse and figure out a plan for their family. Again, most of the families that are getting divorced or that situation, they've got a house to sell, they've got kids. And this is how housing and how mortgage companies really come together and can advise and give you the knowledge you need to be successful. It's very scary when families are going through that. I'll let you wrap up, John.
Yeah. Hey, give us a call. Let us work through all the numbers for you. Appreciate Harvey and I getting the opportunity to talk to you all today. Thank you so much. Look forward to you guys calling in, listening to the radio station 97.1 FM every Saturday morning, 9 to 10 a.m. Harvey Freed is our host, and he's going to be having a great guest this weekend. So, did we do the compliance thing, Harv?
Sponsored to you by. We'll let you go. We'll thank Roberto real quick for helping us to get through the podcast, and we'll see you all next Wednesday on the podcast, and we'll see you Saturday on the Hardcore Mortgage Show on 97.1. Thank you.